Hey everybody, welcome back to the channel. Today we are looking at ticker symbol CZR, Caesars Entertainment Inc. What I want to know is number one, does this stock deserve to be trading at 39? What are institutions and hedge funds doing? And how does their overall financial picture look? Let's dive into the numbers. Let's look at the chart and see what we can find. Let's go. All right, so if you know me, you know I like to look at the bigger picture. So taking a look, see, they got nailed pretty hard during the lockdown. It went down to the stock went down to like $5, $6, $6, and it rose to $116, and now it's to $39. If you are like me, you can see exactly what I see, and I'm drawing it out right now. It looks like a big fat bear flag. Okay, that's pretty, I'm being a little exaggerative here, but um so basically what this means is a move lower. And when it's on a longer term chart like this, it's usually a powerful move to the upside or downside. This is a bearish pattern, so this is a move to the downside actually. And just doing some more doodling. Ooh, could be just confirming that it broke this resistance before it moves up. So we've got an interesting thing here. Let's look at the numbers. Strength is actually going downward. It's at a 42 right now. We want to see it above 50 plus to the upside, with the stock going to the upside. The momentum has been pretty dismal for about 7 months. The stock does not really want to know where does not really know where it's going. Money flow is just, you can see that it's just going down. Relative momentum has been flat now for about a year and some change. Okay, sales, you want to see this exactly. Sales going to the upside, EPS coming upward, that's fine. Shares outstanding, they had 77 million shares in 2019. Now they have 215 million. We're going to run my calculation here and see what we get. So the market cap's 8,460,000,000. Total, the income, I'm surprised they don't offer a dividend, is $786 million flat. Did I do that right? Yes. No, I did not. Okay, 8,460,000,000 in market cap. 8,460,000,000, yes, plus 786 million. There we go. And they have sales of 11,530,000,000. Insane. Okay. Now we're going to remove the cash. I'm sorry, add the cash, remove the debt, and we'll go on from there. Quarterly, gross margins, not too sexy. Okay, they have 1 billion in cash. That's good. Plus 1,127,000,000 cash. 1,127,000,000. Total debt 25 billion. That completely erases my calculation. 25 billion, 711 million. 25 bill, 711 million. Yeah. So this puts my calculation underwater. So there goes that. Total assets is 33,366,000,000. Total liabilities 28,646,000,000. So they've got about a $4.7 billion buffer. Director purchased, wow, $621,000 worth. Same director quite a bit. There's no, okay, the CEO did purchase some actually. Um, wow, this person, Michael Pegram, is just buying relentlessly. Stephanie Lapori, the only smart one, selling out for 1.7 million. I'm just kidding. She's he or she, I don't know. Okay, so this busts my calculation. Um, and that's just due to the total debt that they have. They've been around 26, 25 billion in debt for a while. Let's see. Where is it? I mean, their debt 2019 they had 3 billion in debt, 2020 26 billion in debt. Holy cow. They went into 10x debt almost. And they've been paying it off very slowly. Ooh, my gosh, that is just insane. So what's their quick ratio? Is it under 1? It is under 1. What that means is if they were to close their doors tomorrow with all of their proprietary assets, cash, what have you, they would not be able to pay back all their debts. That's what the quick ratio under 1 means. If the quick ratio over 1, if they did have over 1, that would mean they could pay off any debts. If they had to close their door tomorrow, they could pay off any of their debts with assets, cash, etc. They are under 1. So that is dangerous. However, we do need to acknowledge they are paying their debt off. So there's that. But it breaks my valuation calculator. So I'm going to have to rely on charting, which is my bread and butter. So we're going to go back to my favorite, and we're going to go CZR. I've charted this one before. All right. Okay. Well, my current self is thanking my past self because I see everything I need to see here. Caesars is going back to $25. I'm pretty confident. And let's see, how did I get to this second Fibonacci arc here? I don't know how I got to this arc, but it looks pretty accurate. But what we can base this off is the stock price is not within this upper Fibonacci arc. It's below the Fibonacci arc, which means it's weak. So what we can expect, in my opinion, and here's what this is, I don't know if we want to call this deep pattern recognition, but I call it that. So what we see here, and apologies on the lag. Okay. So it's symmetrical, basically. We have there's our initial support. Here's the middle of our bubble. Here's our peak. Here's the middle of our bubble. And here is back to the line, basically, which I'll put probably like right here. So basically it's 5 cycles here. We have base, rise, high, back to the rise, back to the base. And then it repeats the cycle that way. But it's going at a higher slope because our base here is 1494. Our base over here is 2744. So about 100% difference. So we can kind of, I don't want to say model it out, but kind of. Let's see. So we had our base, then this dip here. And we had our high go. Okay. So we have this channel where we had support. Support's tested again, falls through, acts as resistance 3 times, support 3 times. Then this upper channel gets tested like 10 times up here. Then it falls through again. And now when we base again and come up, I think this is what we're going to see. Cycle. Yeah, like right here. And I'm going to zoom in to kind of just explain this nonsense. Okay, so we have our base, rise, all-time high. And then right here could be our rise, a middle of our rise before it goes down here. Potential base over here in 2026. Base again, then our rise in 2029, and then our all-time high in 2032. This might sound crazy, and I understand. George Trich's periods of when to make money does have a market melt up similar to what we had for the dot-com bubble and COVID. And it captures all the manias in the market all the way back to 1800s. That's my most popular video. It's very, very detailed. Go check it out. It goes over all the periods of highs and lows. Please go check it out. But this makes sense to me. And this would put the new all-time high for Caesars at, okay, so base, rise, high, rise, base, rise, high, $190. Because we have it here, and then we have it here. That's just my observation, and it's absolutely bonkers, which is fine. But again, I do think we are going to see $25, $26. They do need to get their debt under control because that is insane. $25 billion in debt. And they make 11 billion. So they need to make some tough decisions, but they could come out on top, and I don't see them getting that under control soon. With the rates the way they are too, God, that's got to be hurting them really bad. So my position here is I think the Caesars is going to go down. I don't have an upside target. I can't give an upside target. My valuation method was broken due to the amount of debt. I also have a long-term bearish pattern on the monthly chart. I don't see upside to this stock at the moment. Even if whatever the craziest stuff happens, I'm still not going to believe it. I think we get to 25 before I really revisit this one and consider anything. So if you made it this far, I'm sorry if you have a position and you don't like my analysis. But leave me a comment. Tell me how crazy you think I am. Consider subscribing. Hit the like button or the down thumbs button. Hope you're having a great day. And if you're in this one, good luck. Take care.